The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 12th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question, and in the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 95 points, 26,067 is the print. S&P is flat at 2887. NASDAQ 100 down 0.4%, 31 points. Apple weighing heavily on that, I suppose. It's off $1.57. I know Tim Cook is on stage. So that probably means everybody's listening to him, and nobody is listening to me. But that's okay. The Russell 2000 down 6.5 points. Semis are off nearly 2%. Well, 1 7/10% to be exact. 23 points to the downside. Gold is up $8. What's going on there? It's trading out at 12.10. We'll take a look at the key level of resistance that it has to take out in order for it to truly find its sea legs out there. Silver's up 11 pennies. That's up 0.8%. Light sweet crude trade out at 70.81. Lead the charge the upside. It is Galapagos Islands out there. Only it's Galapagos NV. GLPG's ticker symbol up 17% or $18. Tesla's up 12. Netflix up 9. Boeing's up 8. Solid Biosciences is up nearly 8. Google is up 20. ABIOMed down 11. WellCare Health off 8. So we have things to look at, but what we're going to first look at, well, there were a number of emails, 4, count them 4, that came in late in the day yesterday. It still counts. It's just called the carryover. And so we're going to take a look at those. One from Tim. Tim wants to take a look at Mosaic. Earl wants to look at whether or not natural gas is bottom. Mike wants entry points in Apple, Netflix, and Amazon. And Aaron wants to take a look at CGNX. I forget the name of that stock. So we're going to look at those. But first, let's just take a look at what's going on in the markets, what it is that we want to be paying attention to at 10 after 1 in the afternoon. So what are these markets doing? Isn't that the question out there? Well, when we take a look at the equity futures contract, we're going to see a tale of, well, really 2 different stories. We're going to see, well, a tale of stories. The first story that we're going to take a look at is the NQ panel 2. But let's go ahead and expand that. And what you're going to see, well, you'll see it when I turn price off. And we don't see this too often. Now, we've got the equity futures contracts rolling over. So this is where our synthetic contract that I have created inside the eSignal platform is really helpful to us. You're going to see a brand new profile has formed there. Now, let me turn off the trend line. Don't need to turn it on. I don't need to turn it off. I know somebody out there is saying, hey, Steve-O, where's the center of that box on that daily profile? Good point. The center of the box, whoops. Oh, come on, don't do this to me. Come on, don't do this. There we go. The center of the box, I'm not referring to you. When I say don't do this to me, like I'm pretty much just talking to myself when I'm out here. You just get the chance to listen in to what's going on in between these 2 eardrums out here. And so the don't do it to me, I was referring to my system. 72.43 is the center. That is also the bottom. Really strong support level. Should be really strong support. If price closes below that, a strong level of support has failed. That will tell you something. At this stage, that is not what has happened. The high of the day happens to be basically where the top of the box is, 75.45. So you've got this range. I don't know which range is going to be broken. One of them is going to break to the upside or the downside. You can see that today has traded inside that entire gambit, that entire range out there. So it makes it pretty easy. Close over the top of the box, it's bullish. You run back to the highs. A close below the bottom of the box, and then we can go figure out later where price is headed to. That's right, where price is headed to. Is there anything else for us to pay attention to? Not really. Yeah, not really. Yet the ES Mini just continues to sit at the bottom of its box out there, so it doesn't know whether it's bullish or bearish. And the reason why it doesn't know is because it does have positive market breadth out here. We looked at this yesterday. So as we take a look at it now, we're taking a look at the number of issues, the constituents inside the S&P 500, 182 of them that are trading above the top of their box, whereas only 127 below the bottom of the box. That gives you a positive or bullish bias market breadth out there. If you're wondering why the ES Mini is having a tough time going to the downside, that is because of this market breadth out there. The other indicator that you and I are going to pay attention to is where is that spot volatility index trading when it comes to the end of the day. If we take a look at the day right now, we can see it's trading at 13.18, and the 50-day exponential moving average is 13.26. The message here is bullish. But that's just at 1:12 in the afternoon. This is an end-of-day indicator out here. But if you're short, and you see in the short the ES Mini especially, and you see the spot volatility index close below the 50-day 13.26 out there, and you see the ES Mini trading above the bottom of its profile, which is 28.89, chances are you're on the wrong, did I say wrong? Wrong side of the trade. So that's what's going on as we take a look at these equity futures markets out here. The other time frame that you and I are going to pay attention to, we looked at this yesterday, and that is that Rhodes momentum indicator bottom signal, which did confirm. We were on the air yesterday. We knew that that my show closed at about 3 or 4 minutes to. We were taking a look at that 2 p.m. bar. It did close over the top of that box out there, and that was at 74, about 79, somewhere right around there. Price got up to resistance earlier this morning. That happens to be the green dashed line. That is the Tom DeMark setup trend line, set up by the 9 count to the downside out here, and price moved lower. And what did it do? Just like on the daily time frame that ran down to the bottom of that daily profile, guess what? The bullish structured 5-hour energy chart is also support. That happens to be 74.22 out here. So the NQ different than the ES Mini in many different ways out here. One of those with regard to the NDX 100 is it has a bearish market breadth crossover still. There's 26 issues trading above the top of the box and 33 below the bottom. So you've got one of these markets that just simply is not firing on all cylinders, and I don't know which cylinder it is that is going to get the market in sync. And I'm not referring to the band out there. I'm just simply referring to everybody being page. Right now, everyone's reading a book. They're just on a different chapter. And but if you stay tuned, I'm sure at some point in time here, things are going to get synced up. So when we get back to this break, let's go look at Mosaic. Let's go look at natural gas, Apple, Netflix, Amazon, and CGNX. And I want to look at what you want to look at, too. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's begin with all the requests that have come in. Tim wanted to take a look at Mosaic from a long and midterm entry point out there. And if we take a look at Mosaic, you're going to see down here in the monthly time frame chart that it had one of those Rhodes momentum indicator signals out here back in July. At this stage here, it's been up for 5 weeks in a row with the monthly, 5 months in a row with the monthly close being above the prior close 4 bars earlier. That's what starts at Tom DeMarco's setup system out here. So this could be week number 6. Prices above Stevie's red line. It is red at this stage here and the top of its box. So it does look like it is a buy. Now, Tim, what you've got to be paying attention to always is your targets on any moves higher are prior swing points. And the prior swing point on the monthly basis is February 2017, about 89 million shares there. And last month it moved in there with 106 million shares. So it's moving into a swing point with volume. That says to you and I that what Mosaic should be doing on a long-term base doesn't tell us that it's going to take that level out, but it should be targeting 34, 36, or 31.25. Chances are, and I know you want longer term, the reward risk here could be somewhat suspect. But if I'm going to give you a price, which I will, the 28.63 is the top of the weekly profile. So on a pullback, that would be a level. And 29.72 is the bottom of the daily profile. I don't have any indication that that's where price is going to head to. But I think from a momentum standpoint, well, the average daily true range on this is 71 pennies. So your stop would have to be at least 71 cents times 1.618, I would say, below your entry price. But I think you want to see something pull back to support. 30.59 would have to be the minimum that you would want to see inside of Mosaic. 30.59 is probably it out there. So I hope that that helps you out. Earl wanted to take a look at the natural gas. And so I need to do what I need to do with regard to natural gas is, Earl, I don't think you shared with me which chart or which contract you were looking at, but I'm going to pull up the October chart out here. And because I think it would be October or December that probably are the active contracts out here. But if we do take a look at October, and maybe someone in the den, if they're listening, can confirm that for me. Here's what I see, Earl, with regard to natural gas and today's action. And that is, you didn't want to see, from a bullish standpoint, so you're looking for a bottom, you didn't really want to see what you saw thus far in the day, which is, you and I, we look for this phenomena. We look for this phenomena when we see Stevie's green or red line change colors. In this case here, on September 6th, it went from green to red. That tells us the price oscillator. Difference between two exponential moving averages had crossed or was at the zero line. The phenomena is that price and that line are going to catch up to each other. Doesn't tell us when, just tells us to prepare for it. And then to prepare for it, and then to determine a bullish or bearish test. In this case here, what we saw was price tested the top of its market profile, 2.859. So it accomplished that test. Sold off somehow from there and is trading below Stevie's red line, the oscillator and change line, 2.841. So if it closes below that, Earl, you now have two rejections of resistance out here and says, hey, may have bottomed. Maybe it did. But price is getting ready to head back down to either that point of control at 278 or 277, the bottom of that box out there. And 274 is still wide open. What happens if price closes above Stevie's red line, 284? Well, I'd say in order for this to give you the confirming bullish message, you really needs to close above 2.859. That's the top of that daily profile out there. And then you can target the prior swing point, which is the August 22nd level out there. So it's wonderful that we didn't get to your question yesterday, one, because it came in towards the end of the show, but because today we have so much more information to be able to share with you with regard to natural gas. That is at least the October contract. Mike wants to take a look at Apple, AAPL, and I think there was somebody else who wrote in that was looking for Apple. That was another Michael, or maybe it's the same Michael. I think it's another Michael. So this Michael says, Apple looks like it can go back up to the recent highs as well as to the 208 level on the charts. Which one do you think it'll do first? We might get our answer with the announcements today in Apple shortly. I'm not in an Apple trade now, just looking for an entry point from a short-term swing standpoint. So let's try to, I believe that Mike was looking for an entry point in Apple, Netflix, and Amazon. So to a certain extent, maybe this helps to answer the question for both of you out there. And I need to do this too on my other chart. I need to go ahead and pull up Apple. Here's what we know to the mics out there. And what we do know right now, as of 1:23 in the afternoon, is that Apple is trading below the low of its daily profile. That profile is 223.85. In essence, it has been resistance ever since September the 6th out there. So for 4 or 5 days. And if price is unable to close, so this is for you, the short-term trader out here, Michael R. If price closes below 223.85, then that would suggest to me a lower price. Now, you came up with a price target of what? 208? 208. 208. Is 208 that move to the upside out here on August the 1st? No. But that's really where that last sign of strength is at. So now, Apple would have to close below a swing point. Right now, that would be the September 10th level out there, and you'd want to see it do it with more than 39 million shares. That's if it were to go to the downside out here. That's a real possibility on a day when you have announcements out here, and you're already at 27 million shares right now. It hasn't given you an extremely bearish message, not as of 1:24 in the afternoon. If it were to, though, what I would suggest is that price would pull back into the last area where it broke out. And what I show as the breakout area, let's go ahead and get what color line out here? I don't know what color. Let's see. It's going to be red. It's either going to be, or it should be, 197.31 to 192.14, because that was a move to the upside with volume, 67 million shares back then. So that's what I would be looking for. Now, Mike is also looking, the other Mike is looking for an entry point. And so right now, Mike, I'd have to say that would be one of the places that I would look at. Why? Why would you look at it there? Good question. Well, we do have price trading below the bottom of the box. We also have price trading below Stevie's red line. It is green with envy right now. And those would be the reasons why I would be looking to the possible downside action. What we also have going on inside the NDX 100, as you know, is that we do have a bearish crossover here. So maybe, just maybe, this is a signal as to things to come. I don't know if it is or it isn't, but you do have some of those stars lining up. If we take a look at some longer-term time frame charts out here, such as the weekly, such as the monthly out here, well above the tops of those boxes. So not a lot for you and I to hang our lovely hat on. So Mike and Mike, that's what I see when I take a look at Apple. If we want to go take a look at Netflix out there, we can call it Netflix. You're also looking for an entry point in it, and that's the other Michael. I don't think it's the same one. The entry point looks like, and you're looking for an intermediate term time frame chart out here. So intermediate term basis, price is trading up towards the weekly top of the box, 365.35. You need to see it close above that. Preferably 374.24. That's the top of that monthly profile. So I think you need to be patient. That is a bearish structured box. We'll finish this off when we come back from this break. Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to Paramus, New Jersey, and speak with Victor. Victor, thanks for calling. Thanks for holding. How are you today?
Good. I have two of them. First one's BHC on the weekly candle. Is that a buy or no?
So
BHC
Victor, BHC or BCH?
No, BHC, right? The Bausch Healthcare.
Okay, let me get that, because we had BCH, by the way, is Banco de Chile, and I was wondering what you were doing with that, but you're not doing anything with it. So let's go take a look at. So the question is today's candle a buy signal?
On the weekly, is that a buy? Is that a buy the way it looks? It's a small candle or a big candle? or no,
Well,
nothing?
you know, one of the things that you and I want to do is be able to pick out resistance. And so from a weekly, first of all, this equity, as you know, has done basically Zippo, right, since 2016. So it's just not anything to really get excited about on the long term. But I want to answer your question specifically. We have to find resistance, and right now it's trading right at resistance. The top of that market profile, which identifies resistance for us, is 2363. It's trading at 2364 right now. So if it's bullish, you're going to see a close above that level today, or this week, let's say by Friday. And then if it can do that, what it's going to do, or it should do, is trade up to the week of June 11th, and that would be 27.79 to 25.72. So are you looking at this for more of a longer term? Well, tell me, kind of give me a feel for.
I'm just going to do a little test by a few hundred shares and see where it goes. Maybe, I don't know, the market's kind of all over the place. They have a few drugs coming out for your eyes and all that stuff.
Yeah, look, what this has going for you on a weekly basis, just to stick with it, it does have most certainly a series of higher lows, and it certainly has a series of higher highs out here. But as we speak today, it's trading at resistance, and it's hard to say, yeah, go buy resistance. I'd rather you buy support, which on this equity on the intermediate term time frame would be 1946 out here. It's also yeah, that's what I see when I take a look at that weekly time frame. What was the second one that you wanted to look at?
Second one is STM. I missed out on buying this thing, and I know they're on the next generation when everybody goes to 5G networks. I'd say the buy is around $11. They have to be between
give me that single again. Give me that symbol again.
STM.
STM. Say microelectronics. Okay.
Yeah, I see $11. I should buy the gap over there. It's the halfway point between 24 and 6, and you divide it a few times. Where's the buy point?
Well, I tell you, so the buy point. So this thing has so many gaps. I have to assume that it's currency related.
Do you know over in that other country? Yeah, they're European.
Okay.
That's why I figure they're bashing out of it too. Yeah.
Okay, so here's what you and I want to do on this one. Let's ignore the gaps, and instead let's look for some other pattern that would help you to identify a bottom. And that pattern could be forthcoming here over the coming days. You see, price has been moving lower, doing it with less relative energy. Began that pattern on September the 8th. It still is doing it today. What you need to see, just like on the first symbol that you called about, you really want to see some type of bullish reversal candle. It could turn into a hammer candle today. It is not right now. Maybe it's not a hammer candle. Maybe tomorrow it's a bullish engulfing. You want to go ahead and keep your eyes on this. If this is one that you want to do some bottom fishing on, but you want to see the cavalry come in. You want to see some type of bullish reversal signal. And then I would say you want to see a close. Depends on whether you're conservative or aggressive. The aggressive person would take the trade on a bullish reversal candle. The conservative person would wait for price to close over 1857. But I can see, so ignore the gaps. But we do have patterns here that are worth noting and paying attention to.
Yeah, right now they're seen as a surplus of chips anyway. Look at Micron, you know what I mean? So I'm figuring this glut's going to stay out for a while, and they might all, like, Micron might even go even lower. Like, when Micron's earnings come out to 20, I think that STM ain't going anyway. They're all involved in the next generation, 5G. Like, well,
if that's the case, though, if we go with your theory there, and it's good, you're taking a look at what's going on basically inside the sector overall, and so that says
oversupply supposedly semiconductors, and then DRAM prices are coming out. Where would you buy MU at right now? That's what
let me first go back to this, and then we'll take a look at Micron. Right. In essence, you would want to be able to see some type of bottom signal inside of the semiconductor index. Now, today, the problem with today's candle session is you have both, as we speak at 135, both a bullish and bearish candle. What I mean by that is we had a gap to the downside. That is bearish. But what we have is we also have a bullish hammer candle as of 1:35 in the afternoon. What price did was it came right down to its level of support, this little red dashed line out here. So the semis are suggesting to you that they may have found a bottom, which you can use then, in essence, to incorporate into your thinking for the first symbol that we took a look at. And now with regard to Micron, just trying to get the sector right, when we take a look at Micron, it is, it's a bummer. It's bummer because it's not.
I go to this website, makeitshorts.com. It's like #1 shorted right now. So normally when it's shorted, it's time to buy it.
Yeah, I think what Micron is doing and what you want to watch for, Victor, is pay attention to the February 9th swing point low. It was a hammer candle as well. It had volume of 65 million shares, the top of which is 41.19. You've tested that today, but it's testing it with pretty good volume, 51 million shares. So I don't know if it is a bottom, Micron, just yet. You know, you'd like to see it test that level with lighter volume, and it hasn't done that. And certainly you'd like to see it close above 41.19. You may get that, but it looks to me like if you're pushing into a swing point with volume, what it says to us is the odds favor that level will be tested again. Now, maybe it tested with lighter volume. That would be your buy on Micron. Otherwise, the buy could be the low of that session, which, by the way, is 37.52. So I hope that helps you out.
Yeah, that stock used to trade at $6. And that went up to 20, and then for like 10, 15 years, it went down to $6 and never did nothing.
Yeah, yeah. Well, look, I think the semiconductor sector is a great sector to be in, and I think you know my call here. The U.S. stock markets, once we're through this consolidation inside the Dow, the U.S. stock markets are going to be higher, substantially higher than what most people are anticipating over the coming years.
You know why? It's midterm elections, and Trump will do anything. You know, he'll put those working men in there.
This has nothing to do with Trump.
He ain't going to lose this. He ain't going to lose the election.
This has nothing to do with Donald Trump. What this has to do with is big daddy dollars. This is all about dollars. Dollars have to go somewhere.
The foreigners love him. They love Trump.
Well, dollars, Victor.
They love Trump. They're all taking their money out of their countries and putting it here.
Well, they're taken out because there is confidence in the U.S., the United States.
Yeah, right now we're good. We're corrupt. We're good. We got liquid money right now. Everything's good, and then boom and bust.
Well, that's one way to
every
take a look at it.
79 years, you have a bust in the real estate market.
All right, my friend, we're about to go to hard break. Thanks for calling. I hope that helped you out and take a look at each of those symbols. That was for Victor in Paramus, New Jersey. And, folks, if you are in the path of that hurricane, being an individual who's been through a number of these, in fact, it was a year ago when we were chasing our fannies around here because we had gotten smacked with a hurricane. Just be very careful. And it is worthwhile to just simply go ahead and get the heck out of Dodge. Hey, come visit us. There's no hurricane down here. We'll go golfing. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So for Aaron, let's go take a look at Cogenix Corp. CGNX is a ticker symbol. And Aaron is looking for a long entry point in this. And so, Aaron, and I think it was from a longer-term standpoint as well that you were looking for it. And what here's what it looks like to me where this ticker symbol is going. We can see it's above the top of the daily profile. It's above the top of a weekly profile. It is within a monthly profile. So the monthly says, hey, 65.36 is game on. But before it does that, it has some other areas of resistance that it needs to get above. For example, if we take a look at a weekly time frame chart, 57.45 happens to be this little green dashed line. That's that Tom DeMark setup trend line. That is likely the price target. You're at 54.88. Probably not worth the risk reward right now inside of this trade out here. This is likely going to be week number 8 of the Tom DeMark setup. Next week could be week number 9. But, you know, do I suggest that you take it now? I don't. I don't. I'd rather see you buy support. In this case, here on a weekly chart, by the way, it'd be the Stevie's red line at 50.29 versus 54.90 out there, knowing that that resistance lies dead ahead in front of us. Now, it could get through 57.45-ish, and but then the next level of resistance is going to be 60.07, where this thing had gapped to the downside with about 3.5 million shares. Like you're up today with 445,000 shares out here. But I can certainly see that as a target level. Here, on the daily basis, I would rather have you buy support. So support, if you were looking at this, and you were looking at that nice breakaway gap on July 13th, if we had been taking a look at these profiles, we would have used about the 51.70 level, then the 52.55 level to be buying support. We're above, so you have momentum to the upside. I don't know that the reward risk is there. A pullback, yes. So let's keep looking at that. Keep sending me emails. Let's find the bottom of those boxes so you can jot them down. And then as price pulls back to support, it is whammo. Speaking of whammo, and I don't know what that meant. Let's go to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you out there?
Steve, I'm doing pretty good. I've got a question regarding Twitter. I'm short, and I don't know. I thought we could get down to I was using a 200 period exponential weekly moving average as my target, which is down like in the low 28 and change. But I'm looking at it today, and it's going lower, and the volume looks like it's really drying up. So at this point, what do you think? Do you think now would be a good time to cover?
Well, it's going lower with lighter volume. I mean, I haven't looked at the volume, but I know how good of a trader you are, a technical trader, so we're going with that. You know that. It's also pushing lower with less relative energy. We can see the black diagonal line on my screen out here. Now, that alone is just a warning signal. You live in Florida. Right. You've turned on the weather report. They say it's going to rain somewhere every day in Florida. It doesn't necessarily rain. So here is talking about, hey, bring your umbrella with you, you know, if you're going to be outside, but doesn't say you need to go ahead and close out this trade out here. It's trading below the daily bottom of its box. Let's take a look at Stevie Z signal charts out here. It's going to be a little bit easier to see as we move things out of the way. So this daily profile that formed today was bullish in structure. What I mean by that, let me turn price off, because this is why I want you to stay with the trade right now. You're going to see that the center of that box was very close to the bottom. It was at 3109 versus the bottom at 3045, a bullish structured box. Price should be able to hold that level. Now, if you see price close above 3045 today, then in fact you do have that signal that says, okay, good time to go ahead and cover. But if it trades below, there's nothing more bearish than a failed bullish pattern. This could continue to head lower. How much lower? Well, the how much lower, probably you were talking about a weekly chart. I would be paying attention to that week at this stage here, the week of April the 2nd. Now, that had 112 million shares. You're at 54 million. We're halfway through the week, basically, so it's roughly about the same type of volume that you're pushing into it. But price could easily get to 2660. Doesn't have to, especially if it rejects 29.33 on lighter volume. The low so far this week has been 29.25, so you're testing it. But the volumetric at this stage, I don't know. You know, it's about the same. Do you have a nice profit in it?
I got in at like 30, 33, I think, and change.
Yeah, okay. Well, then in that case, I would just be watching the bottom of that daily box, Mike, 30.45. If it stays below that today, even with light volume, you know, you can go ahead and hang on to it, and you just got to keep your eye on it. But right now, what I don't see is the bullish message that would say you need to cover. But,
right, and that's one of the most important things I learned from you in the past is if you're using the ABCs.
Yeah.
So at the D point, let the market tell you how much lower it's going to go.
Sure.
And look
Absolutely.
for the bullish or bearish candles to confirm that move. And that's one of the greatest things that I learned from you. It's really helped me a lot.
Well, I'm going to record that and play that back. But, hey, look, you got it, and that's a beautiful thing. You know, and so that's the nicest compliment that anyone could ever give to me, was that I was able to share something with them, and then you're able to share it with others, because this game is going to be around for a long time. So we got to teach our kids and our kids' kids and so forth out there. So I'm glad that you use that tool. And as we speak right now, yeah, I don't see the reason to go ahead and exit your Twitter short trade out there. All right.
Okay. Well, like I said, I did see one warning. And I figured I'd call you and see if you see something that I didn't see. So
well, we see it out there. We both see it, but we're both so used to the weather patterns, so to speak, in Florida that we know. Yeah, okay. You know, we'll wait. We'll wait until we actually have to open up that umbrella. Okay.
All right, Steve. Thanks, and like I always tell you, thanks so much for everything you give to us. Like I said, when I first started listening to this, you know, Tom O'Brien,
yes.
I learned his method, and you've added so much to add to it to really, really help trades be successful.
Hey, it's called Team TFNN, or Team Obi-Wan Kenobi. So we're all on the same team. You and I, we're on the same team out there. So thanks for everything you do as well.
Okay, great. Bye.
All right. I was Mike in Ormond Beach. Now, we wanted to take a look at, let me see, there was an email that came in, and this was from Tamar. No, well, that's pretty cool. So I don't know how that works, but it just works in life. And Tamar, can you review Twitter and Intel? Okay, well, tomorrow you're going to get a twofer. So he says, I'm listening to the show, not Tim Cook. Lots of laughs. I love you out there. All right, so we got the Twitter thing already figured out. Let's go take a look at Intel out here. And so everybody's interested in the tech sector. I wonder if that means anything. So if we take a look at Intel, what are you asking for here? Well, so that's interesting. You said, do you see a bottom on Twitter on a daily chart anytime soon? So you can use exactly what Mike and I were just talking about out there. You just have to wait for the bullish reversal candle, and then you may have something as far as a bottom on Twitter. With regard to Intel, you said also, I know the current trend for Intel is lower. I bought some calls on Intel. Think it'll bounce for at least a week, maybe the 47.50 level. So let's go take a look at this for tomorrow in Seattle. Now, on a daily chart tomorrow, I've got a little yellow line. Oh, that's the A to B equals CD pattern. Well, hey, You know, there are no coincidences. Mike mentions the A to B equals CD pattern, which on a one-to-one basis, Intel is completing or potentially completing that by the D point. What do I mean by that? Well, the market does 75% of the workforce. Hey, we got to go to a break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
All right, for tomorrow in Seattle, what we're looking at here is Intel, and what tomorrow's looking for is a possible bottom. Now, if you're watching us on Tiger TV, you're going to see yellow lines out here that represent the A to B equals CD pattern, a lightning bolt pattern. Now, the coolest thing about this pattern, it's used to project where price is likely headed to. And the market does 75% of the workforce. It generates that A point, generates the B point, generates the C point. And it does that by just simply creating these different swing points. The swing point where you see a change in trend. The A point, June the 4th. The B point is June 28th. Now, on June 28th, you didn't know that was the B point. But as you saw that change in trend and the market move higher from there into July 24th, you knew that was the B point. Then price begins to move lower. Now, the one-to-one price projection, just like taking a ruler out, we don't use these to be exact. Can they work to be exact? They can. But we use these as guidelines out here, just like Jack Sparrow would do, or whatever the guy's name is. Now, the one-to-one price projection was 44.20. You're at 44.55. It's traded down to 44.06. Does that mean you buy away? No. Learn the lesson that Mike learned, or at least the one that I try to share with each of you. Wait for the cavalry to arrive. This is simply just a projection tool. If this is going to be a bottom, there's going to be a bullish reversal candle. It could be today. It's not today as we speak just yet. Wait to tomorrow. Wait to the next day. You may be able to pick Intel up at 41.73, the 1.2728 to be equal CD. Maybe it's 43.60, the bottom of the monthly profile. Maybe it's 42.67. It's likely to be somewhere around there. But at least put the odds or the probability in your favor. If you see the bulls come in, at least you know where they are at and where it is they are likely to defend price if the sellers decide to go ahead and pick a fight again. So on Intel, I think you're close, but no cigar, and I want you to wait until those bulls arrive. In the meantime, I want you to stay tuned because your favorite polar bear, my favorite polar bear, that's David White. He's up next after David. Tom O'Brien Show 3 to 5. I'll be back with you on Thursday. Take care. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.